Hey there. Alright, this is video number 6, and in this video we're going to talk about the market watch. Alright, so let's navigate over to our trading station. Now, can you recall how we can get to the market watch? Give you a few moments if it's not already open. Alright, the first place is here, and it's in one of these other menus here as well, view, and then we can click on market watch there. Alright, so there's the market watch. It actually labels it there for you. Alright, next to the market watch you have a time in there, and this is in a 24-hour format. Now this time format is not actually your local time. It's not New York time, it's not Sydney time, it's not Tokyo time, but it's the time of the server that this trading platform is running off. Alright, where I am at the moment, it's 9:49 in the morning, but as you can see here, it's 17:49 in the evening where this broker is, and this broker is actually situated in Cyprus. Alright, so when you're doing like Forex strategies and what have you, try to base your strategies, like for instance, like maybe the US or the London breakout strategy. Alright, I won't get into that strategy right now, but you can use time formats to work out when to go long or when to go short and what have you. Alright, so use that from your local time, or try to work it off maybe Eastern hours, and then trying to work out the difference between Eastern hours and what your market watch time is, so you can work out whereabouts on the chart to where to place your buy trades or your strategies, to where to start them from. Alright, now in the market watch you have 3 columns, and you have the symbol column, the bid, and the ask price. Alright, now you might not understand what these currency pairs mean, they're abbreviations, but if you hover over each one of them, you'll get a caption that comes up and lets you know what the currency pair is. Alright, now also we have a bid and ask column. Alright, now it's the better way to explain this is by bringing up this order box. Okay, now in the order box you have a buy and a sell button. Alright, the sell button's on the left and it's marked as red, and the buy button on the right, and it's marked as blue. Now if you're colorblind, I do apologize, I know this is going to be a little bit difficult, but I understand that there is one form of colorblindness where blue does come out as blue, but it's a bit of a dull blue, and the color of the blue does enhance in depth as the color gets darker as well. So I know that for one type of colour blindness that there does come out as a blue, but for the other end of the spectrum of colour blindness, a blue comes out like a mouldy green. Alright, the red I believe comes out as red for one particular colour blindness, but it's like a different shade of red. But for the other type of colour blindness, I think it comes out like a dark grey, or more or less like a black colour. But if you do suffer from colour blindness, what I will try and do is, to my best, is actually find another way for you to follow along. If we're using colour references, I will actually use the references for the parameters of the indicators as we go along. Okay. Now, the bid price is basically the price that you would actually be charged at if you was to go long. Going long means buy, or you're trying to feel that the market's going to go up. Alright, so the bid price would be, normally if you were to click on this buy button, if I can explain it this way, if you were to click on this buy button here, you'd think that you'd be charged this price here, 155.47.2. Alright, but it's not. You're actually charged the lesser price. Alright, and it might seem like you're getting charged less, but you're not, and I'll explain that in just in a moment. When you click on the sell button, the price that's going to be activated is this price on the top right hand side, and not the one above it. Alright, and vice versa for the buy trade, it's going to be the opposite one, the adjacent one. Alright, so, and when you click on the, say like the buy, what's going to happen is that the difference between this price on the left and the price on the right is referred to as a spread, and the spread is like the broker's commission, or something or another. Sometimes they don't really take commissions, they might just do a flat rate base, and these kind of figures might come from like the intermediary bank. Alright, now the spreads will get wider and shorter depending on how many people at the same time make an order or make a trade. When it comes up to like news releases as well, you'll see the spread get wider, and it's kind of like a warning or a heads up to let you know that the market's going to start becoming a little bit more volatile. So be careful and only act on these kind of signals that you may get during this particular time, is to act on them, very carefully. Okay. All right. So, and just to show you as well the different ways that we can actually go ahead and open up the trades. There are 5 different ways. The first way is that I've just showed you, and that's clicking on this new order button. Alright. The second way is going over to the market watch area and right clicking on any currency pair that you want and clicking on new order. The third way is choosing the desired chart that you would like to open a trade from and choose right click, trade in, new order, or alternatively press F9. The other way is up here through the tools, new order, and press F9. Alright. I believe that is the only other ways that you can go ahead and open up trades. So there you have it. Alright, now fundamental data. Let's quickly move into this before we get into the next video. Sometimes when I start up my trading station, the first thing I'm going to look at is this Forex Factory website. Okay, you can use Bloomberg if you like, but I prefer Forex Factory's data. It's a little bit better. Alright, now you've got a time up here, and then this time might be different. So the first thing you're going to need to do when you go to Forex Factory is click on that time, alright, and choosing your time zone. And once you've clicked on OK, this will now reflect your time. Alright, and all of these times here will reflect your time. These won't be Eastern hours. By default, they'll be Eastern hours. Okay, now these are the currency pairs. Now when we trade Forex, we don't actually trade one currency pair. No, one currency. We trade 2 currencies. Alright, that's why we have like EUR, which is euro, or the euro dollar, and we have the USD, which is the United States dollar. So what you're essentially doing here, if you wanted to go long, okay, then you're essentially selling the USD, alright, but you're buying the euro dollar, alright, and vice versa. So when you look at these, you're going to say, okay, well here's a euro, 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 and euro. So it has a fair amount of data coming out, and what we're looking at is data that isn't really good. Now generally, when you see these numbers here, if you click on the detailed folders, it will give you a little bit more overview of what's actually going on. And the main thing that I look at is this here, alright, the actual forecast, and if it's, for this particular news data, if the forecast is lower than the actual, if the actual is actually lower than the forecast, then it's good for the currency. Well, this turned out to be a little bit higher by 0.1%, so it turned out worse, but it's not completely all that bad. If it's a really big numbers, then you can look for a really big move in the market. So let's take a look. So we've got some negatives and negatives here. So since 1 o'clock my morning, which is around about 8 hours ago, we can go ahead and take a look and just go to the hour time frame, and this to go back to around about 8 hours. So that's about 1, 2, 3, it's about 8 is about there. So we can see that around about 1, 2, 3, 4, 5, 6, 7, 8. So there we go. There's the 8th bar. That was 8 hours ago. Let's go and take a look and see what happened. We had bad data, bad data, bad data, and this was the same. Unemployment rate, that's still bad, even though it's the number that's of the same as the previous. Alright, but it's still bad. You want that to be less. So therefore, it's not good for the economy. So what happened? Well, from this point onwards, the market dropped. There was a bit of a baseline rally, and then it dropped. All right, and that's to let you know that the data was bad. So therefore, it supported the dollar. Why did it support the dollar? Because it was the opposite currency pair. It was the opposite currency in this group. All right, euro versus US dollar. All right, so the US actually made an improvement. When the United States makes an improvement economy-wise, you will see its other neighbouring pair get worse. Alright, this is like a single index, like the euro index, not so yeah, so then you'll start seeing it come down, but sometimes it doesn't always work out like that. But we'll get into a little bit more technical, fundamental stuff. I'm not your most perfect guy to go to when it comes to fundamental analysis. I kind of take it as each day goes by and look for patterns. This is how I've actually learned trading, is find the numerous patterns that happen and merge in the markets, and we're going to show you how I actually go about finding those patterns a little bit later on. Alright, so I will leave you there right now with this video, and I will see you very soon in the next one. Alright, so take care, bye for now.